Hi, and welcome to my strategy series. In these videos, we look at quick ways to analyze the markets. In this video, we're going to be looking at when to spot trade, when to increase your leverage and go to margin trading, and when to use big leverage as a futures trader. Okay, let's talk about spot, margin, and future trading, where you should be and how to get to the other stages. So this is going to be mostly theory. We're going to be talking more than doing levels and marking charts. So I'm simply going to continue on with the series. We marked the ladders here and we've marked a trend up here. I'm simply going to continue on as we watch this with just by marking out this blue to blue candle as the active trend. Again, when we talk about trends, we don't have enough data on the daily to mark anything. We could use the bottom of this, but we have a 4-hour interior range that we are more likely to be using than that larger trend. That would be the daily from down here to a point like this. Feel free to use it, but it really isn't going to be as accurate as this trend here. You need this thing to come down one more time, break this range right here in order to use a daily to daily trend like that. So with that said, trend accuracy, remember, distribution to distribution candle. While it may not look right, I guarantee you this will be right going forward. And if you really are trying to stay above this thing, you could go to smaller time frames and see if it hard closed breaks. But I think it's a little too premature to be doing that. So let's talk about spot trading spot trading, margin, and futures trading. We left off, and we're going to watch this. We left off with trends and kind of a prediction of what's going to happen next. So people who spot trade, the thing that they should be doing is spot trading is when you're a brand new trader. It's very safe. It's quite hard to lose money spot trading because you're not taking a lot of risk and really you're trying to find these points in the charts that are the final moments. So for example, if you were going to hold all of these ladder points, you were going to hold this one, which is represented here, and you have to now hold this one, which is represented by the level here. You know that if you start to break this trend and break down a little bit below this level here, you're going to lose a lot of money because this thing is probably dumping down to a much crazier range. Like I would assume that after it loses this level here, if it does lose this level, you're breaking down either way down here somewhere to one of these two ranges or to the bottom of this move to see if it can test to hold it up. So after this first little 0.24% is lost, you're scaling all the way down, like another 2.75% here. So you're scaling all the way down to 3% and 5% and even lower into this to the 10% mark. So there's not much to be gained by staying in a failing trade here if you've taken a long and it starts to fail below that 0.25%. That's where you would just get out of your trade. And for spot trading, you really can't lose that much money spot trading for this reason because you're losing 0.25%. And regardless of the amount of money, 0.25% is still small given the size of the entire holdings. So you don't sit here and say, oh, 0.25% of $100 million. Well, of course, but still small relative to the size of $100 million. So relative to the size of the holdings, 0.25% is very safe. So if you notice your accuracy is low in the charts and you're having troubles finding these greedier and more kind of final moments, these moments of polarity, these final things that can hold up the entirety of the chart, well, you would want to be more of a spot trader because you're going to be diminishing the amount of money that you're losing down to a smaller amount. And you have a bigger room of error to say, maybe you marked this as a 4-hour level. So let's go mark this 4-hour level. Oh, there is no 4-hour level in here, actually. What about like an hourly level? Is there an hourly level? Do we have anything there? You have something inside of here, the hourly level right here. So maybe you marked this and not realizing that you could ladder all the way down to this part of the move because it's the next thing that laddered off the test of these levels. So you may not know, and this just draws back to the 15-minute levels. If we need to go through this again real quick, this just draws back to your 15-minute levels where you had a 15-minute level there that was tested. And your next one was right here, which was tested. And your next one was right here. And this would, I believe this is what got tested in the moment. And it did. So this range, the entirety of the range of all the 15-minute candles, and specific in this moment to 15, it's not always going to be a rule that it's 15-minute candles. These ones had already been tested. So therefore, your next part of this move is down here. So if you wouldn't have seen that and didn't realize that, well, you might have marked the hourly level and said, hey, it's supposed to be here. It's the hold level I'm supposed to go after. And then maybe you missed the fact that it actually tested right here. Hey, this actually tested this hourly hold level, so it's likely not going to hold this. It's likely going to say, we've tested this range. Let's go down here to this range, which is exactly what you're seeing right now. It's trying to create a ladder off this range. So this is where spot trading is good. If your accuracy is low, spot trading becomes the right thing to do until you can increase your accuracy, until you've just had enough charts and enough trades that you can say, hey, I understand these ladder points. I understand the triggers. I understand trends and hold levels. And you've gone through my courses and you've been able to scale up in size. That's where you can say, okay, now that I've done my accuracy checks, I'm pretty confident in what I'm doing. I'm getting really good trades. You can then move into being more of a margin trader. Margin is slight leverage. And what margin means is you're using a contract, you're using a multiplier. So if you had $100 on a trade and you did, say, 5x, well, making 100% would net you 5%. So if Bitcoin doubled in price on a 5x contract, a margin of 5 times, again, this is a multiplier. So if Bitcoin doubled right now and you had $100 on a 5x contract, well, if you were on spot, you would make $200. Or sorry, you'd profit 100. Your total position sell size would be $200. You would therefore have made 100%. If you're a margin trader and you use 5x, which is 500% of the gains, you would have a 500% left over afterwards instead of 100 or 200, depending on 100 starting size. 200 was what you would make on spot. If you went to 5x, you'd make 500. But you also lose it just as fast. So what happens is that 5x, you're also multiplying it on the other side. So instead of having to lose, if you were to lose that same $100, Bitcoin would essentially have to go to zero if you were just on spot, because one Bitcoin is worth whatever it's worth. But if you were on 5x, you would only have to lose 20% of the price in order to liquidate that position. Now, there's calculations and fees and different things. We're just using easy round numbers so people can understand the theory. I know don't go too crazy with, oh, what about fees? What about this? I'm well aware of the fees and those things, but we're just using easy numbers to kind of prove a point and sell a message here. You will only be at a spot where 20% of the price of Bitcoin goes down, you've lost that $100. It liquidates your position and takes that money. So when you're trading spot, it's kind of like, okay, I can trade spot, and this is more of like an investment thing in some circles. You can say, hey, spot trading is great for long-term investments because you don't have to manage them and worry about it going up or down too much, just because over time, spot trading, really makes sense for investments. You can still margin or futures trade investments. You just have to be a little more attentive to the positions. But as your accuracy increases, you're going to want to go and you're going to want to try to increase your leverage into maybe 5x or 10x or even 20x is getting a little high. That's starting to get in the derivative side of things, which is futures, which is high leverage, high gains, high margin, small room for error. So you're going to base all of this on how accurate of a trader you are. And then when you go into futures trading, which is anywhere from, I believe the definition for futures is 25x. I believe you can still technically be trading margin under 20x. Don't know the exact line. I'm a 100x trader. I just do 100x. Don't know the exact line between if it's 20 or 15 or 25, but somewhere in there lies the hard definition of, and I believe it's 25%. 25x. That's the hard definition of being a futures trader. So you can increase your leverage even then further, but you've got to be like on the spot accurate, because in this trade, if you were to buy this level on 100x, I think this is like a liquidation here. It's really close. You would lose, you're close. Your liquidation is around, after fees and everything, around 0.6 and change. It varies based on the different fees in the market, maker fees, taker fees, how you've executed your trade, market limit. There's a lot of variables it factors on. But if you are in, say, a 100x trade, right? And you went and you said you wanted to long this spot, you would have almost lost all your money. It almost gets to that point where you've lost it all. You're close. So your accuracy must be laser straight. You must be nailing trades to the $1, $2, $5, $10. You must be nailing them to start becoming a derivatives trader and a futures trader. So again, the way you scale this and the way you surmise what makes sense for you and how you fit into this, and what should I spot trade or should I margin trade, should I futures trade? The way you do that is you do it by checking your accuracy, and you do it by seeing how close to the price can I get before it actually moves in the other direction. So to understand this properly, you just have to take a bunch of trades, and you just have to continuously do accuracy checking on yourself and say, hey, most of the time I'm getting really close. Maybe I should up my leverage a bit and try it. And don't go off the deep end from 0 to 100. 100x is the pro leagues. I may do it, but this is also like the highest level of trading there is. This is the extreme pro leagues. This is only for the best of the best in the world. So, you can make a great income off spot trading. You can make an insanely good income off margin trading. Futures trading is, even better, of course. But then at the same time, it's only for the most high level professionals in the world. So be careful with futures trading. And that's a good way I like to teach people how to gauge how they should spot, margin, or futures derivatives trade, is based on the accuracy of how they catch moves. On the next one.